The great news of the day, interest rates are below the 6% level. And no, it has nothing to do with data. And no, it has nothing to do with this ceasefire. It has to do with spreads. And I'll explain what that is in a minute. But in the meantime, what do we have on the data front? Goose egg. We absolutely had nothing. We had home builders come out. Their sentiment is at a 7-month low, but hey, can be expected given this conflict. And on the geopolitical front, it looks like the ceasefire negotiations are ongoing. We have till April 22nd. I want to say that's about a week in order to get this resolved. But let's get back to what's the most important thing. And I'm talking about spreads. Now, spreads are basically the way lenders calculate risk. They take that 10-year Treasury, they add a spread, and that gets tacked onto the top of the 10-year Treasury, and that becomes your final interest rate. President Trump months ago talked about the government stepping in and buying mortgage-backed securities, which is what they've been doing. The real estate market seems to be fairly stable right now. Wages are going up, and it looks like a good time for us to be decreasing the spreads, meaning that we get better interest rates. Now, it's always going to depend on your credit score. It's going to depend on how much you're putting down, your whole credit profile. But the fact that we're close means that you should be reaching out to your lender. Once again, you want to make sure you're ready to strike when the iron is hot. So if you don't have a lender, I lend in all 50 states. We'd love an opportunity to help you. But there's a couple things that you want to make sure that you're looking for and asking for should you need to lock a loan, make a purchase, refinance. But first, who am I? My name is Kevin Weedmark, aka the Mortgage Mouth, bringing to you what happened today, how it affected interest rates, what we can expect for the rest of the week, and should we float or lock. So look, I'm in the float camp. Everything seems to be in our favor at this time. The ceasefire is being negotiated. Spreads are coming down. That 10-year Treasury looks like it has an opportunity to come down, even with oil over 92. But if you have to lock, you want to make sure you're asking for simpler concessions. You want to make sure that you're minimizing your closing cost exposure because better rates are anticipated in the future. We want to make sure we're able to take advantage of those. And on the lender side, you always want to be talking to your lender about yield spread premium and your ability to potentially use that to minimize your closing costs as well. Again, I'm here to help you save money. I'm looking at long-term relationships and helping you strategize to make sure the purchase or the refinance of your largest asset is a strategically financial one. So once again, if you need a conversation, please don't hesitate to reach out. I would love that opportunity. Make sure you hit the subscription button as I'll be coming to you tomorrow with another episode to bring you up to speed. And until then, have a great evening. Cheers.